Welcome back to Forex Professional Training in Financial Markets. In this session, we will talk about different kinds of binary option trades, although our major focus is on binary option. We will also introduce option in detail. Binary types. There are two types of binary option, European and American. European option. In this option, traders have to wait until the expiration time of the contract. The contract can be implemented only if the expiration time has been reached. American option. It is the most common type of option that can be implemented between the start date of the contract and the expiration time. Binary option types. Binary option providers represent numerous kinds of binary option based on their client's demand. Granted that the simplest types are the most common trading methods. Binary options are categorized based on different features. One category is based on profit and risk rate of a trading type. Consequently, the riskier one inevitably has a more catchy profit rate. Profit of the most popular and simplest ones are between 40% and 80% of the premium, while the most complex ones may have profit over 500% of the premium. The higher the strike price you choose on a contract, the higher the amount of profit. If you choose a ladder type of trading, farther level of strike price is more lucrative rather than the closer level. The most common category in which binary options are arranged is based on the movement of strike price during the contract time. Up, down, classic high or low, and call or put. Known as the easiest and the most prevalent trading type of binary option, where a trader predicts direction of the price movement from the current price. If a call is purchased, then the price must go up from the current price at the end of the expiration time, so that profit is attained. The payout on this type is between 40% and 90%. More gap between strike price and current price plus unpredictability. Higher or lower, above and below. Due to its intricate case rather than call or put, the payout on this type of trading is more than 100% of the premium. That even rises to 1,200%. In this kind, a trader must determine the strike price or target price. If the price stands on or crosses the strike price at the end of expiration time, the profit is derived. For instance, a trader anticipates that the strike price is 25 pips higher than the current price with a one-day expiration time. If on the expiration time, price stands on or crosses the target price, then a trader succeeded in their contract. Range, channel, tunnel, boundary, and level. Despite different names, the concept of trading is still the same. Traders have to determine a region that price fluctuates inside or outside. This type is divided into two types, an inside range or in range and an outside range or out range. In range. Considering that an asset has a monotonic motion, a trader may speculate that a contract with a 1-week expiration time would be successful. An area with higher and lower edge price from the current price must be specified. If at the expiration time price does not cross boundaries of the defined area, then the trader gains profit. Otherwise, they would lose the premium and the deal. While some binary option providers permit traders to select high and low boundaries of the region, others represent a predefined edge of the area that price must move within. Area with tighter borders leads to higher amount of payout, from 10% to 600%. Outrange. Unlike the in-range type, a price must cross the boundary of a specified area and stay outside the region at the expiration time. This kind is lucrative on highly volatile assets, especially when there would be an efficacious event or announcement during the contract time. Payout of this type would be from 50% to 700% based on the gap between the edge prices, plus subsequent results from a key pertinent meeting during the contract. Ladder. Ladder is one of the most recent types. represented by providers such as IG markets and G options. Strike prices, or target price, with different levels and various payout amounts can be represented in predefined rates. Otherwise, traders can specify the levels and rates. Undoubtedly, the closer rates have less payout rather than further levels. To derive a specified amount from the contract, a price must cross and leave behind the given level at the end of expiration. It may resemble the resistance and support levels of an asset. However, expiration time must be considered as well. Pivot points are beneficial when a trader asks to deal a contract on this type. Payout would be from 60% to 400%, touched by the level value plus expiration time. Touch. This kind of contract has one or two price levels, which determine the success or failure of a deal. Following subtypes clarifies the contract conditions that must have been fulfilled for a profitable deal. One touch. Price must at least reach the strike price before the expiration time. It does not matter if the price crosses or touches the strike price multiple times. The profit is achieved from this contract. No touch. If the strike price is touched or met even once throughout the duration of the contract, a trader will lose the deal and consequently the premium. Double one touch. It is similar to the one touch method. However, there are two strike prices, one higher than the current price and there is one lower. Even if the price hits any of the strike prices during the contract time, the deal would be successful for the trader. Double no touch. Unlike double one touch, price must never meet the strike prices, which are above and below the current price during the contract. Even one hit of any strike levels causes the contract loss. Price action technique explained in Forex trading section is useful when a trader is dealing with this form of contract. Payout would be from 30% to 480%, mostly affected by the strike and current price gap. Pair option. A rare method of trading binary option in which a trader must compare two independent assets and specify which one would have a higher price change on an equal contract time. Payout of a pair option model is from 50% to 90%. That concludes this session. Until next time and the final session, take care.